My name is Ryan Miller, and for the past 15 years, I've helped hundreds of people to raise millions of dollars for their funds and for their startups. If you're serious about raising money, launching your business, or taking your life to the next level, this show will give you the answers so that you too can enjoy your pursuit of making billions. Let's get into it. Hey investors, have you ever wondered how to build a wine and whiskey investment collection? Did you know that a study of high net worth individuals has shown that nearly 1 in 3 people in this sector have done this very thing? See, in this week's episode of Making Billions, I bring on my dear friend Maxwell Nee. Maxwell is building a massive alternative investment around wine and whiskey. He is meeting the demand that so many high net worth people are looking for, and by so doing has built a reputation in this industry as being an expert. Join Maxwell and me as we discuss critical factors in succeeding in this space as an investor and how he's even publishing a book to help even more of us in our pursuit of making billions. Here we go. Hey, welcome to another episode of Making Billions. I'm your host, Ryan Miller, and today I have my dear friend, Maxwell Nee. Maxwell is the managing general partner of OENO Wine and Whiskey Investment Fund. It's an estimated $100 million fund that focuses on building double-digit returns in the wine and whiskey investment space. So what this means is Maxwell is a multi-award-winning entrepreneur who earns his investors a market-beating return with wine and whiskey alternative investments. So Maxwell, welcome to the show, man.
Thank you so much for having me. I'm really happy to be here.
Yeah, it's good to have you. And, you and I have got to know each other a little bit offline, and I'm so impressed. This is one of the coolest things, an investment fund in the private investment space on wine and whiskey. I'm sure our fans around the world, we got people in about 100 different countries right now. I think we would all like to know, how the heck did you even get into being an expert in wine and whiskey, let alone build a fund and produce double-digit returns? So where did it begin for you?
Yeah, great question. So I've always loved investments. I studied finance, spent 5 years in corporate banking. That's like one half of my career. The second half of my career was I fell into the world of online business coaching, helping people to build their businesses online. I quickly learned that, business coaching, it's a really good business to generate a lot of cash revenue, but it's not so easy to build an asset. So the business did really well because I am obsessed with finding pockets of opportunity, inefficiencies in the market. We managed to execute this strategy that grew profitability by 300% in 5 months, which, that's why I've won a few awards for being an entrepreneur. And then, so I had like some cash and I didn't know where to put it. So I started to look at different types of investments, and, real estate is, I've got some in real estate, got some in ETFs at the time, did really, really crap. So I'm out of those now. And then I go to Chicago and I'm meeting my friend who I haven't seen in a long time. And we're at this bar and the bartender says, it's a really nice, classy, chic bar. Bartender says, "What do you want to drink?" I said, "An old fashioned." And old fashioned's a cocktail usually made with bourbon. But I like it with Scotch whiskey because I'm a European snob, obviously. And he said, "Great. So do you want it with Macallan 12 or Macallan 18? So Macallan's like the Ferrari of the whiskey world. Everyone knows it. It's, really high price, good quality. And the difference between the 12 and the 18 is that the 12 is 12 years old and 18 is 18 years old. So 6 years of difference of aging, the same liquid, right? Literally just sitting in a warehouse for 6 more years." And I said, "Look, you know what? I'm on holiday. Let's do the 18. So I grabbed the 18, I drink it, it's delicious. Give it to my friend. He doesn't like whiskeys. He said he's not sure, he drinks it. It's delicious. He drinks like half of it, right? And then I go to the bartender, say to the bartender, "Hey, so, how much was this again?" And he said, $125. And then I said, no, not the tab, not the whole tab, how much was this Macallan 18 old fashioned? And he said, $125. And then my friend starts laughing at me. I thought, wow, well, I'm committed now. So, I've got to buy this drink. And then I asked him, how much was the 12? And he said, 25. And then I thought, holy crap, just a difference of 6 years of aging equals a 500% difference in the price. 500% difference in the investment if you were holding this barrel for yourself. That experience, plus a few others, I've always heard the story, ages like fine wine. I've heard about wine investment, ages like whiskey. You buy it young, you buy it in the barrel, then you sell it in the bottle and you make a huge gain. Like I've always had that in the back of my head, but it was this experience that sort of really opened my eyes to, aging creates so much value, with like predictable value in these assets, because you can't cheat time. No one can cheat time, add extra numbers, because you can tell the difference. That's what opened my eyes to the world of wine and whiskey investment.
Man, that's phenomenal. So what a cool story where it's funny, you're just having a good time with one of your friends, and then you started to do the math like all good investors and entrepreneurs. You're just like, wait a minute. You found this little gap to say, if you go from 12 to 18 in this sector, you get a 5x multiple just for holding that. That is a phenomenal return. And then so now you took this good idea and you figured out an investment thesis, and then you created this investment fund. Maybe walk us through about a little bit of the investment fund and how that got started.
Yeah. So I've basically jumped all into this world. A lot of people ask me why. I had a successful business and banking career, that type of thing. And I want to share that it's because it aligns with my values. My top 3 values. So my first value is freedom. That's what investing represents for me. It represents, putting money away so you have more freedom, more options later. Second value is experiences. Like I would never buy a Lamborghini, just have no desire. But would I rent one for a month to experience it? Hell yes, right? So, and I get to share that with my clients, wine, whiskey, drinking with them, talking and stuff. And the last one is relationships. I only want to have clients and deal with people that I want to spend more time with, that I would hang out with on the weekend, that I'd share a bottle with, after work hours, and like I want to have people that I want to invest more time with in that. And I get to tick all 3, scratch the itch on all 3 in this business. So that's why I love this so much. And since throwing myself in, I'm the managing partner at OENO. The company's been around for about 9 years now. We've got about more than 100 full-time staff in 4 continents, speaking 6 languages to facilitate the returns that we give to our investors. I threw myself in because I just saw so much potential. I saw a huge pocket of opportunity. I saw a huge problem that we could solve for the industry, getting the best stock, aging it at highest quality. Because the most heartbreaking thing is when an investor buys stock, they take it home, they keep it in their garage or like their shed or whatever, or underneath, and then there's some humidity that comes in or mold that comes in, and then we've got to throw that stock away. Like there's so much wastage and breakages that happen. And, the investment fund and everything solves all of that for the investor, for restaurants that want to have this on their menu, and for us to help distribute, these amazing products.
Phenomenal. So you've created that vehicle. Maybe you can help me understand, like, what are some of the things that you're seeing in the wine and whiskey investment space right now?
I'll start with whiskey. So our fund is split 70-30, 70% wine, 30% whiskey. The reason for that is that we're working backwards from demand of a particular menu. So if you go to a Michelin-star restaurant, as an example, you'll notice that there's twice as much wine on the menu than there is whiskey. That's because there's at least twice as many wine drinkers in the world than there are whiskey. So you always got to work backwards from the end consumer. The end consumer right now is consuming a lot of Irish whiskey. So Irish whiskey doesn't have the 1,000 years of high quality branding that Scotch whiskey has, but it's smoother, sweeter. Drinkers would call it more approachable, easier to drink, and than Scotch whiskey, even if it's the same age. And what that does is that opens it up to a larger taste palette and larger audience to grab larger market share. So there was an article from Bloomberg saying that Irish whiskey makers are suffering from a shortage of supply and they can't keep up with the demand. And that's happening with Irish whiskey. That's happening with whiskey bourbon as well. High quality bourbon's not easy to get your hands on. And you'll see the prices going up. And that's because there's more drinkers now than what they made 5 years ago, because bourbon takes about 4 or 5 years to age. And so they've got like a 5-year problem that they're trying to solve right now. And we help them solve that problem as well.
Phenomenal. And, I think you're hitting it right at a perfect time. You and I were talking offline, and, we're both seeing that alternatives, which I would certainly say you are, alternative investments in the private sector are really starting to fly. And I think we're just coming into the golden age of alternative investments. Just with inflation, the minimum $1 million net worth for accredited investors, that hasn't changed. So in other words, more people are starting to move up into the accredited status.
And the income side, 200K, yeah. Yeah.
Exactly, the 200K. So these are things that are allowing more people to enter in the private investment space to make those superior returns. And these alternative investments, when you're able to provide those during the golden age, you're in a good position. What have you found that are some key factors in making successful investments in this space?
Yeah. So when we talk about wine and whiskey investment, we talk about the top 1%. So the industry is about $450 billion of wine and whiskey. And the top 1% is, just under $5 billion. We're not talking about things that people drink and use in mixes and things like that. We're talking about what would be considered as like modern day luxuries, and they don't have to be $10,000 a bottle. They can be starting at $100 a bottle. What's also really exciting about this space is that because these are considered modern day luxuries, these alcohols, drinking habits, what do we learn in economics? Alcohol and cigarettes are the two only inelastic goods. So it's got that benefit as well. Because these assets are in the luxury economy, they benefit from being in their own bubble. For example, last year we saw stock markets, shares drop from 30 to 60% across, multiple industries. But at the same time, who's the richest person in the world right now? It's Bernard Arnault, the godfather of luxury, driving the ship of Louis Vuitton, Moet Hennessy. So he's positioned himself very well to excel in a contracting economy. So these assets are positioned in the same way as well.
You mentioned earlier about Irish whiskey, and there's certain suppliers that just can't keep up. Are you finding what is the impact? Is that key investments are made? Do you see it better to focus on the supply side or the demand side? Where's kind of the sweet spot to focus if you're an investor?
Yeah, it's always the supply side. So if you think about it in simple math, right? If you want the price of your bottle of wine or your bottle of whiskey to double in price in 5 years, basically what you're looking for is there to be twice as many drinkers between today and tomorrow, today and 5 years from now, or for supply to drop twice as fast as it normally would drop. And that's a beautiful thing about these assets. If I want to go out there and improve the climate for our investors, all I need to do is just buy some bottles of wine and whiskey and start drinking. Because it takes 10 years to make some of this stuff and 10 seconds to drink it. So supply can move very, very quickly if you know where the future sort of gaps in the market are and is. There was articles that came out before Christmas, champagne shortages, Irish whiskey shortages, bourbon shortages. There's articles coming out that there's climate change impacting the south of France, where some of the best wine in the world's made. And so all of that's impacting supply. So if you're holding on to the golden bottle when it becomes very scarce in the market, you put yourself in a very, very good position.
So supply side is where you spend a lot of your time forecasting your own price models. So yeah, no, I get it. And now that you've built a fund, typically no one does that as an island, right? They're not alone. How important has it been for you in building your fund and achieving returns for investors? How important has it been for you in building a team? Maybe we can talk about your team a little bit.
The business has been operating for 9 years now, and it's a huge enterprise. We don't have the numbers for 2022 yet. I'll share them later. But in 2021, we did just above 15% for our portfolio of private wine collectors, investors. So this is not in a fund. This is in like a SMA, separate managed account. We were able to achieve that because we've got some amazing people on the team. I'm not the technical genius. I'm not the technical quant. The technical genius is a gentleman called Justin Nock. Justin Nock has MW after his name, which stands for Master of Wine. How cool is that? He's a master of wine. He's like a Jedi of wine. And fun fact, there's actually more astronauts in the world than there are masters of wine. Like, it's a very, very hard accolade to get your hands on. And Justin's been in the industry for 25 plus years. So, all the deals that we do, getting a hold of this, really, really great stock that's going to appreciate in value, it's all done off market. It's an extremely inefficient market. There's no marketplace. If you go to the marketplace, you're going to overpay. So we get in there early, we get in there cheaper and pass that asset margin basically to the investor. And Justin's been doing that for 25 years. We're basically buying into relationships that were built 2 decades ago. So He's critical to the business and the fund. And then we also have our fund manager, Michael Doa, who is like the steady hand. So he's like the steady hand, CEO of the company, founder of the company. And he's the guy that gets the phone call for the best stock. Like, for example, I'll tell you the story. There was a person in Switzerland that wanted to exit some stock. They owed some money to the bank. So then they called Michael. They said, "Hey, Michael, can you help us to exit the stock?" And he said, "Look, we can exit the stock, but we're gonna be really sharp with the pricing because we want to give our investors a good deal." So he gets those types of phone calls, off market phone calls, which is incredible. And Michael actually won Investment Advisor of the Year last year and this year from the Spears 500 magazine. And I'm the entrepreneur, behind this, delivering the fund, bringing it to Delaware. We're set up in Delaware, and there's more people to the team, but that gives you the high level of, the players on the field. I got the picture of basketball in my head right now. The 4 players on the field that are passing the ball, scoring the goals for the team.
Man, that's incredible. So building that team, I had no idea that Master of Wine is there's more astronauts than people with that. So that's incredible. So having an effective team, both on finance as well as understanding the asset that you're investing in. So we call that the expert investor and fund manager. I mean, man, you're firing on all cylinders. This is great. So, as we wrap things up, I'm wondering if you could share maybe like 2 or 3 things that you found that is helpful for people when trying to approach the wine and whiskey space as far as an investment standpoint, not only a taste or, a lifestyle choice, but how do we make money in this sector? Maybe you can distill it down to, yes, pun intended, distill it down to 2 or 3 things that you found to be some critical success factors in making money in this sector.
Yeah, beautiful question. Okay, so this will be controversial to most wine investor collectors, but it's really key. And I actually published as a chapter in my book called The Wine Investor's Playbook that it will be out sometime this year. And the chapter is called "Buying the Best is the Worst Thing That You Can Do," right? Which normally sort of rattles people's brains a little bit. But basically, if you want to beat the market, if you want, the industry generally averages about 8% a year minimum. If you want to exceed that, if you want alpha on top of that in the wine world, you can't just buy the best because everyone wants to buy the best. So everyone's doing it. That's a bit like the S&P, like the benchmark. And also, there's also a really harmful thing about buying the best because remember what drives up the price of these assets is when people drink them. There was 300 bottles last year, now there's only 50. That becomes very scarce. When you buy the best, everyone wants them. Everyone wants to collect them. Everyone wants to hold them, show them off to their friends. They're more like pieces of art, compared to bottles of wine or whiskey, which means that no one drinks them. It's like there's bottles, some of these bottles are sitting around and no one ever dares to drink them because they spent so much money, they're worth so much. So, which means that as an investor, it also creates an illiquid market. Like it's quite hard for you to exit some of these high-end bottles because, people think, oh yeah, but then I'm never going to drink it. So what's the point in buying it? So you sort of want that sweet spot of what people are drinking plus extremely great brand, has a great track record for improving in price. So that's one part. And then the next part is, if you wanted like a hot tip, I'd definitely put your eyes on champagne right now. So champagne's gone up, more than 30% in, and that's champagne like as an industry.
Any brands that you like in champagne or whiskey, wine, anything?
There is, like one that everyone would know that people, might not have thought is a fine wine investment is Dom Perignon. Dom Perignon is a great investment, especially if you get into a good vintage. I can share people offline, which ones are the best ones to get your hands on. But basically, champagne's got up more than 30% in the last 12 months, and it went up again. It jumped up again, just after COVID ended. And you got to ask yourself why, right? People are coming out of their houses for the first time all over the world, billions of people coming out of their houses, like no one's business, traveling for the first time in 2-3 years. What are they doing? They think, oh, I'm going to celebrate. People are having there's 3 years of weddings happening in 1 year, all clumped together because they didn't get to happen the last 3 years. Baby showers, birthdays. What's the first thing you do? You toast with champagne. When you haven't traveled in a while, you might upgrade your flight. You might upgrade to business class. And what's the first thing you do? You go to the lounge, they offer you champagne. You get onto the plane, the first thing they do, they offer you champagne. So you've already opened 2 bottles, right? And then what's the next thing you do when you land? You get into the chauffeur, he offers you champagne. You go to the hotel and he offers you champagne, right? And then you're there for your friend's wedding in Tulum or Bali or Mexico or wherever you are, and then you're toasting with champagne, and then you go to the after party at the club and you're drinking champagne. So champagne is, exceeding expectations as a fine wine investment, and it's just really simple as to why. So that's a bit like the hot tip, but the hot tip for people who like when I was starting off in my career, right? I don't know why, but I had this intuition that proximity was really, really valuable. Like I didn't come from the rich private school, or the rich family, or whatever have you, but I just had an intuition that if I could, you know, surround myself with people that were inspiring and that pushed me and motivated me, that I'm just going to play higher and have great relationships, and it's going to pay off in some way. I didn't quite know how. So I have a genuine interest in this, like a real genuine interest. So when I started off my corporate job, I was underqualified for it. I actually graduated with a GPA that was below satisfactory. The satisfactory GPA is 4. I graduated with 3.6 because when I failed hard, and when I passed, I passed small. I passed just above the pass line. And then I realized, holy crap, like I need to network my way into a good job because I'm not going to get it otherwise. So as a poor uni student, I spent $1,000 buying people coffee off this whole floor, and I was rejected. I was rejected 37 times from the same job, but I just kept meeting people and kept, learning and learning. I just what can this person teach me? What can they teach me? I didn't have anything to offer at that point in time, being the uni student and this is the corporate professional. But, I've always loved learning, but practical stuff. I hated learning in school. I loved learning practical stuff. So I translated that into business and all that sort of stuff. Like, here's one thing that I always do, always do. Whether I'm flying business class or not, I will go to the airport lounge and I'll pay the $100 to access the lounge. And then I will go there early, like 5 hours early, and talk to every single person there. Because I have like this thesis, like I'm going to meet interesting people there. I could probably help them with a few digital marketing things every now and then, because I'm a younger digital marketing type of guy, and these are usually older CEO types of guys. If not, then I'll buy them a coffee at a random cafe, based on they walk in a suit carrying a briefcase. They might have like a nice watch on, and I can talk about watches. I like watches as well, so it's a common interest. And I bridge gaps that way. And you might not get a sale today or a sale tomorrow, but it's not about that. It's about you paid $5 for this coffee to have an extraordinary conversation with someone that inspires me. And that's the cheapest coffee I've ever bought for anyone in my life.
Yeah, that's pretty good return on investment. And I actually talked about this in my early days. It's actually a very similar story. I would take people out and it's funny. I'm going to bring this up. So I was in Mexico at an investor event, and there were people cheersing these 3 stories from my earlier episodes of my podcast. One of my first episodes, which was about how I went about building connections and reputation and relationships. And I had this principle similar to yours, was never eat alone, always ask people about their story, and be generous. And so by never eating alone, buying people coffee, it was just a great way when you don't have a lot to offer other than a listening ear. And a lot of these people at the top of their game can feel kind of lonely sometimes. And so that's number one. Number two, a lot of them, if they're in a good, mental, spiritual space, that they're actually very willing to help the next generation. And I found that out very early. Is if you can get some time with these people, even by, I'm in Canada, so making them an offer they can't refuse, which is a warm drink in frozen tundra of Canada. I mean, these people will, for $3, you can build a connection, and you just offer generously to support them in whatever it is they're trying to do. At the time, that was me building financial models and just helping them to, discuss risks and financial pitfalls. And by doing that, I was able to build a lot of connections in that space. So as we wrap things up, is there any final thoughts? Is there a way that people can reach out to you if they want to learn more about what you're up to, or how can people connect with you?
Yeah, so I'll share some links. I'm most active on LinkedIn. So if you just Google me or LinkedIn me, you'll see my past life, my past business. I'm all over YouTube there actually. But Maxwell Nee, if you Google me on LinkedIn, I read it, check it every day. I'm a bit addicted to it. So that's good responsive rate, customer service rate for anyone listening.
As we wrap things up, just to conclude, listening to advice from Maxwell, focus on supply. Be a contrarian investor in this space. Number 2 is gain access to key information. Understand your market. Understand the people who also understand your market. Building that team is a great way to gain access to information. And then number 3, build your network in creative ways. You do these things, and you too will be well on your way in your pursuit of making billions. What a show. I hope you enjoyed this episode as much as I did. Now, if you haven't done so already, be sure to leave a comment and review on new ideas and guests you want me to bring on for future episodes. Plus, why don't you head over to YouTube and see extra takes while you get to know our guests even better. And make sure to come back for our next episode where we dive even deeper into the people, the process, and the perspectives of both investors and founders. Until then, my friends, stay hungry, focus on your goals, and keep grinding towards your dream of making billions.